信我可以有目标就往上爬。你相信你可以勇敢的往前冲吧。有想法就有办法，有办法就不用怕，我们一起到达，是 number one， 强大的企业家，超越表现的力量，我们一起到达，是 number one， 强大的企业家，超越表现的力量。我相信我可以有目标就往上爬。你相信你可以勇敢的往前冲吧。有想法就有办法，有办法就不用怕，我们一起到达，是 number one， 强大的企业家，超越表现的力量，我们一起到达，是 number one， 强大的企业家，超越表现的力量。我相信我可以有目标就往上爬。你相信你可以勇敢的往前冲吧。有想法就有办法，有办法就不用怕，我们一起到达，是 number one， 强大的企业家，超越表现的力量，我们一起到达。
Hi, good morning everyone. Wow, welcome again to my tax Facebook live session. Yes, welcome again to my secrets review session, and that is on techniques to solve tax audit issues. Yes, as usual, every Friday morning, I will be doing this. Yes, and we're gonna start this at 11 o'clock sharp, of which I'll be revealing to you another secret, another technique on how to solve tax audit issues. Yes, I know a lot of you are eagerly waiting because I can see there are more and more people coming into this Facebook Live already, and you really want to learn what is the next technique, right, to solve another tax audit issue. Yes, thank you so much for coming in so early. But you know what? We're going to start at 11 o'clock. We're going to start at 11 o'clock sharp, yeah? But since you're so early today, you know what? That's good news to you. That's a good news to all of you today. That is, if you share this Facebook Live out now, if you share this Facebook Live out right now and tag 5 friends, yes, just have to tag 5 friends, yeah, in the comment box, you will stand a chance to win one of the 3 tickets, right, to our tax audit and investigation webinar worth 498 ringgit. Yes, I'll tell you what, right, this is a super good deal, right? You don't have to do much. You just have to share this Facebook Live out by just clicking or tapping the share button. Now, if you're viewing it from a phone, go to the bottom of the screen, you'll find the share button, right? Just tap that share button and you'll be sharing this out. If you're viewing it from a computer, you'll also find that share button. Just click that share button. You will share this out already. After sharing this Facebook Live out, help me do one more thing, that is to tag 5 friends, yeah? Tag 5 friends in the comment box, because once we have seen this, once they've seen that you have tagged 5 friends in the comment box, we will be putting your names into our lucky draw pool, of which we will draw 3 names later. Yeah, we will draw 3 names later for you to win one of the 3 tickets to our tax audit and investigation webinar, and that is worth 498 ringgit each. So it's that simple. Just share this Facebook Live and tag 5 friends, all right? Once we see you have tagged 5 friends in the comment box, we'll put your name into the lucky draw pool. So do it right now. We're going to start at 11 o'clock later, right? In just, I think, wow, it's almost 11 anyway, yeah? But we're coming back soon, yeah? At 11 o'clock, we will start right now. So do it right now and start tagging your friends, start sharing this out. I'll see you in just a few more minutes.
我相信我可以，有目标就往上爬。你相信你可以，勇敢的往前冲吧。有想法就有办法，有办法就不用怕，我们一起到达，是 number one。
All right. Good morning to all of you. Okay, I know it's 11 already, and I think we should get things started already, yeah? Right, it's already 11 o'clock, and I know a lot of you are eagerly waiting for this to start, because you want to learn more techniques, right? You want to learn more techniques. You want to know more about how to solve tax audit issues. Yes. And today, I am going to reveal more secrets. I am going to reveal more secrets to you, more techniques to you on how to solve tax audit issue. And I will be sharing with you, again, another case, another real case that happened to one of our clients. Yeah, what is the tax audit issue and how did we actually help our client to solve that issue? Yeah, so I'll be revealing more secrets to you. And I can see right now we have more than 100 people already watching this Facebook Live. And you know what, right? Now, those that have just joined me here, right? If you have not heard what I was saying earlier, you know what, today we have a lucky draw session. Yes, today is very special. We have a lucky draw session for all of you. How do you actually get into the lucky draw? Because if you, right, go into the lucky draw pool, you will stand a chance to win one of the 3 tickets for our tax audit and investigation webinar. That's right. And that is worth 498 ringgit each. All right. So it's worth 498 ringgit each. We have got 3 winners. We will have 3 winners today. If you want to stand a chance to win that, very simple. First, share this Facebook Live out. Yes, just share this Facebook Live out by clicking or tapping the share button. If you're viewing it from a phone, go to the bottom of a screen, you will see that share button. Just tap that share button, all right? If you are viewing it from a computer, you will also find the share button, right? Just click that share button. After that, share it to 5 friends. How? Tag 5 friends. Yeah, tag 5 friends into your comment box. Once we have seen you have tagged 5 friends into your comment box, you will stand a chance to win one of these 3 tickets to our tax audit and investigation webinar. So it's that simple. Just share this out. Tag 5 friends. Once we have seen you have tagged 5 friends in the comment box, we'll put your name into the lucky draw pool. And then at the end of the session, I'll be drawing 3 names to win one of these tickets. Yeah, all right. So that's simple. So do it right now. Share this out and tag 5 friends. All right. Now I can see a lot of people are actually start tagging ready, and I can see people saying hi or good morning to me, like Sydney Su, hi, yeah, Kelly Tan, KK, hi, welcome, Kiki Cobb also, hi, and then I have Jin over here, JYHN, is that how I pronounce your name, Jin, right? Yeah, hi, right, welcome and good morning. Okay, now I know probably out of like 100 over people right now, there are probably a lot of first timers. Yeah, there are probably a lot of first timers today. Yeah, can I just do a quick check? Because every time when I do Facebook Live, I want to do things that is more interactive. All right, it's Facebook Live is all about two-way communication, right? It's really not about like just one way. So can I just check with all of you? Like out of 100 over people right now, how many of you are actually first timers? If you are a first timer, can you just put number 1? Just put number 1 into the comment box so that I know you are a first timer. Yeah. So if you are a first timer, can you just put 1? Yeah, just number 1 into the comment box so that I know you are a first timer. I just want to see how many first timers are there. Yeah. Of course, I see more and more people are saying hi to me. Like this is CTI Bay. Is that how I pronounce your name? All right. And then I have Alice Chin. I have Lee Vincent. Oh, I can see Suki. Suki is also has started tagging your friends. Yeah. I think Suki has joined us for a few times. Yeah. All right. Who else? Okay. I've got a first timers ready. I have Anna Ng coming for the first time, Kate Koo, Farah Farah, Daniel Lau, CTI Bay is also a first timer. Cornelius is a first timer. Wong Angel is first timer. Oh, Jane says I'm from PP Stale. All right, cool. Yeah, that's our client. Okay, I have Ashwarya, also a first timer. Who else? Any other first timers today? Looks like we have quite a number of first timers today joining us for this very first time. Now, those that have been following me, you will know the whole sequence and the whole process that we're doing this. Yeah. Oh, Hui Jasmine is also a first timer. Very good. Now, so it looks like today we have quite a few of first timers. Yeah, we have quite a number of first timers today. Now, in case you're a first timer, you're coming for the very first time. Yeah, you probably do not know who I am. Yeah, this is probably your first time joining, right? Now, just let me tell you that my name is Zen. Yeah, Zen Chow. Yeah, of course, some people call me the tax guru of YYC. Now, if I were to share my screen, yeah, people sometimes say I'm the tax guru of YYC, but who exactly YYC is? Because now, I mean, people call me the tax guru, but the fact is that I'm actually the tax director. Yeah, I'm the tax executive director for YYC Group. But you then would ask me, who's YYC then? I've heard of YYC, but who exactly is YYC? Now, let me just take this opportunity to quickly introduce to you who YYC is. Yeah. Now, YYC is actually an accounting and advisory firm, and we were established since 1974. Yeah, and our brand promise over here is that we want to empower entrepreneurial success. Yes. Now, but to do that, we have our vision and mission. Now, what's our vision over here? We want to be the number one world-class accounting and advisory firm in Asia. Now, but more importantly is our mission. Our mission is more important. Why? Because we want to inspire everyone, including you who are watching Facebook Live right now. We want to inspire you as well so that you can overcome your odds, unleash your potential, and more importantly, find fulfillment in life. Now, that's a very important mission, isn't it? Now, but to do all that, of course, we have to uphold our promises over here. Now, first, we want to share expertise. You may be asking, hey, why do we want to do this kind of Facebook Live, for free, to share with you all the techniques? Because that's our brand promise. That's one of our brand promises. Yeah, we want to share expertise to everyone, and we want to show proactive care. Yeah, to everyone over here. Yeah, especially our clients. We don't just want to show normal care, but proactive care. And most importantly, we want all our clients to have the most positive experience ever. All right. Now, you may think YYC is probably just, any other normal accounting firm out there. No, you are wrong. Yeah, we're not just normal accounting firm, because a normal accounting firm would probably have compliance services only, like audit service, tax service, or even accounting service. Yeah, but we have much more than that. You see, we have our very own advisory arm, of which we do a lot of different advisory services like share structure, strategic planning, valuation, or even cloud and digital transformation. Yes, we do that as well. We also have our very own business school, of which we hold a lot of seminars, workshops, webinars from time to time. And we also do a lot of outsourced job like outsourced accounting, outsourced bookkeeping, outsourced payroll through our global business services. All right, so these are all the things that we do. Now, in the event, if you see any of these services that you feel like, hey, I want to know more, I want to understand more, no problem. You can actually just drop us a message. Our professional team will get in touch with you. Yeah, you can just PM us. Yeah. All right. No, so like I said, YYC was established since 1974. That means we are turning 47 years old this year. Yeah. And we call ourselves an international firm, not just a local firm anymore. Why? Because we don't just have presence in Malaysia. We also have presence in Singapore. All right. We have more than 800 employees, more than 20,000 clients, and we have trained more than 130,000 participants through all our workshops, because we've done more than 5,000 workshops. Yeah. Now, these are all the awards given to YYC all these years. All right. All these years. So now, like I said, YYC is not just a local firm anymore. Yeah, we are international, because we don't just have presence in Malaysia, we have presence in Singapore as well. But of course, in Malaysia, our headquarters is in Kuala Lumpur. Yeah, and of course, we have branches also in Selangor, in Johor, in Penang as well. Yeah, whenever I come to this part, this is what I always like to interact with all of you. Now, I can see a lot of people are saying that, you are our first timers already. Now, but can I also check with you? Close to 200 people right now, in the Facebook Live, close to 200 people. Where are you from? Can I just check with you? Where are you from? Can you just tell me where are you from? Put it into the comment box. You can tell me which state you're from, or which town, or which city. Or if you want to be very specific, you can tell me which area. Say if you're from Kuala Lumpur, right, you can just tell me which part of Kuala Lumpur, which area in Kuala Lumpur are you from? Say you're from Kepong, you're from Setapak, you're from Cheras, just put that into the comment box. Let me just gauge, out of these 200 people, where are you all coming from, All right, so put it into the comment box, and I can see more people saying hi to me, like Jess Ngoy saying hi to you. Oh, Jean, thanks for your compliment, a very professional group of service company. Yeah, thank you so much. And I can see over here also, Ng Lien also a first timer. Ng Lien says this is the first time joining tax audit topic, but see me many times. Yeah, thank you so much. Thanks for all your support. Thanks for joining me again this time. Yeah. All right, let me see. Okay, I have people from Puchong. Oh, Lian is from Puchong. Okay, Penny is from PJ Selangor. Jeep Sian Yu is from JB. Oh, and then over this side, I have Anna from PJ. Farah from Johor, Jasmine is from Kuching. Wow, I have people from East Malaysia. That's really good. Yeah, Cornelius is from Kuching as well. John Ruben is from Pasir Gudang, Johor. Then I have people from Selangor, Pahang, Bangsar, Seremban, Klang, Cyberjaya as well. Okay. Oh, Penny says second time. Yeah, thank you for joining me for the second time. Lim Pu Chin, Priscilla is from Penang. Justin also from Penang. Wow, looks like we have a good mix today. Yeah, we have people from the north, from Penang. Yeah, and also Eve Tan from Taiping Perak from the north. We have more people, and we have some people from JB, from the south, like Jeep Sian Yu, yeah, like John Ruben from Pasir Gudang, Johor. Wow, and we also have East Malaysia, like Cornelius, like Hui Jasmine, they're from Sarawak. Wow, that's cool. And of course, not forgetting the central part of Malaysia, yeah, like Mariana is from Cyberjaya, Jane Loy is from Klang, and then we have Penny from PJ. Very good, very good. Today we have a very good mix, yeah. Northern Malaysia, Southern Malaysia, Central Malaysia, even East Malaysia. Thank you for coming again, yeah. Now, I know today, all of you here today, it's not here to chit chat with me. I know you don't want to come in here to just chit chat, to just tell me where you are from, right? The motive, the objective of you coming in to watch this Facebook Live is to learn more techniques, right? Is to learn my secrets, right? Yes, and I know that. And I do not want to delay further. I want you to learn my secrets, yeah, my techniques to solve tax audit issues. And you know what? today we are going into episode number 28 already. Wow, you know what? We have done like so many episodes, and today is episode 28. Now, first timers, if you are joining us for the very first time, you may say, episode 28 already? What about the previous 27 episodes? I have missed 27 episodes. Don't worry about that, yeah. I know you have missed the live session, but we have all the 27 episodes all in my Facebook page. Yeah, you can just go to my Facebook page. That's Tax Guru Zen Chow Facebook page. Yeah, Tax Guru Zen Chow. Just search for that right on Facebook. Go to the videos section. You will find all the 27 episodes all there in the video section. Yeah, so just go to Tax Guru Zen Chow. You will find all my videos there, right? And remember, yeah, once you're in that Facebook page, Tax Guru Zen Chow, remember to like, share, most importantly, follow my page. All right, just most importantly, follow my page, because we have just hit 10,000 followers. Yes, we've got 10,000 followers already, and I want to increase even further. I want to go even further. So help me to go to the Tax Guru Zen Chow Facebook page, like, share, and most importantly, follow. All right, okay, so you will find all the previous 27 episodes over there. But after that, always follow my page and join our Facebook Live, because live is all about, asking questions and answering to questions. So if you have got any questions during the live, just feel free to put your questions into the comment box, and I will be answering that. All right, I will be answering all your questions. Now, before I really go into this, just let me remind all of you again. Today it's very special. Yeah, why? Because today, if you just do one very simple thing, you will stand a chance to win one of the 3 tickets to our tax audit and investigation webinar. Yes, and this ticket is worth 498 ringgit each. Yeah. How to do that? Just share this Facebook Live out by tapping or clicking the share button. Then tag 5 friends. Yeah, tag 5 friends into the comment box. Once we have seen that you have tagged 5 friends into the comment box, you will stand a chance to win one of the 3 tickets. Yeah, because I'll be doing a lucky draw at the end of the session. You may win one of the tickets to our tax audit and investigation webinar, and that is worth 498 ringgit. All right, so do it right now. Share this out and tag 5 friends. All right, okay, now so let's get things started. All right, today, episode 28, what do we want to talk about? Today, we are going to talk about this issue, and that is called director's emolument. Hey, I know, if you are a director, or if you are, working for a company where you're doing the accounts and you always see, there's director's fees, director's salary and things like that, right? You will know that, hey, this is a very common expense, right, for a company. A director of a company would usually draw salary, draw some allowance, and probably would have some fees as well, right? Now, but what is the issue over here? Now, I'm going to share with you what is this issue all about later, right? We'll share a real life case. But first, let's look at director's emolument. Now, if you pay director's emolument, whether it's salary, allowance, or even fees to a director, hey, is this tax deductible? Many people will say, hey, if I'm going to pay my directors some salary, can I get tax deduction from a company's perspective? Now, first, let's look at the general principles of deductibility and see whether director's emolument actually fulfills the conditions of this deductibility. All right. So we always say that to look at whether an expense is deductible or not, we always have to look at this section 33 bracket 1, which is subsection 33(1) of the Income Tax Act 1967. This is the subsection that talks about the deductibility of the the expense. Yeah. Oh, like Li Ping Hua was like very quickly asking me a question. Emolument equals to remuneration? Yes, emolument equals to remuneration. All right. So it's just the other word for remuneration. Yeah. All right. Cool. All right. Now, first, how does an expense get a deduction? It has to fulfill these conditions under subsection 33(1). Okay. First, it must be incurred. It must be incurred during that period. Now, for sure, if you pay director's fee, pay director's salary, it should be incurred, right? It shouldn't be a provision. Now, what's the difference between incurred and provision? I always explain this, yeah? If you do a provision, it's only an estimate. That means, right, it's not confirmed one. If it's not confirmed, you have no obligation to pay yet, then that is provision. Of course, that is not deductible because it's just an estimate. But if it's confirmed, I've already got an obligation to pay, then it's incurred. Yeah. So most of the time, director's emolument, well, it should be incurred, right? Because you have already confirmed that you're gonna pay the salary, the allowance, or the fees. Yeah. So no issue with incurred, right? Then it must be an outgoing and expense. What do you mean by outgoings and expense? Yeah, it means you gotta pay money lah, right? You gotta pay money, man. So that means that after you have, say, accrued certain expense, right, you gotta also pay money. Yeah? This expense is not just some non-cash item. You may ask, hey, is there a non-cash item available? Yes, of course. Like for example, depreciation. Yeah, depreciation is a non-cash item. It's just an accounting entry. You don't have to pay money, right? Yeah. So outgoing and expense is the second condition. But if you ask me, director's emolument, do I have to pay money? Of course. Of course, you're going to pay money, right? So no issue with fulfilling the second condition. Outgoing and expenses, yeah? All right. Now then what about the third one? Wholly and exclusively for business purpose. This one is important because we see when we pay director's emolument, when we pay director's allowance, salary, is this relating to business? Now you may say, hey, this director is working for the company, what? The director is helping the company to do work, what? Then of course it is wholly and exclusively for business, right? So no issue, yeah. So when you say I pay director's salary, I pay director's allowance, yeah, it is for the director who is actually helping the company. The director must be playing some role to help the company, and the director is part of the business, isn't it? Right? So when you pay director's salary or director's emolument, it will be wholly and exclusively for the business. So no issue with this condition at all right? Then it must be revenue in nature. Many people would always ask me, what's this revenue in nature? What does it mean? Yeah. Now, actually, it's simple. Yeah. You see, revenue in nature means if you expense of certain thing, if you incur certain expense, it is for the operation of the business. It is for the ongoing of the business. Yeah. It is not creating an asset. Yeah. You are not buying a new asset, because if you buy a new asset, that's capital in nature. Yeah, that's capital in nature, not revenue. So when you pay director's salary, but you pay director's allowance, that's definitely revenue. You're not buying any asset, right? So you would fulfill this. And the most important condition that I always say is it must be in the production of gross income. Now, if you actually pay director's allowance or director's salary, are they really helping you to make more income? Obviously, you will say yes, right? Because a director won't be just staying there doing nothing. They will be doing something for the company because they represent the company, isn't it? So most of the time, you will say they will definitely be doing something to help the company to do better, to make more income, and therefore paying director's emolument will be in the production of gross income as well. So, looks like director's emolument, no issue, right? It will satisfy all 5 conditions under subsection 33(1) of the Income Tax Act 1967, right? So, what would be the issue? You may be probably thinking, hey, what could be the issue, when it comes to tax audit? Now, let me just show you what is the case all about. As usual, we will always share a real life case, a real case that happened to one of our clients where the IRB came, they do audit, and then they found out there is some issue. And we are going to tell you how did we actually solve the issue? How did we actually help the client to actually drop the issue? All right. So what is this issue all about? Let's look at the background of the case. Yeah. Let's look at the background. Yeah. Now, before that, John Ruben has a question over here. John Ruben is asking, if we put the director remuneration under accrual director remuneration and we didn't pay the director remuneration during the period. Now, John Ruben, if you accrued the director's remuneration under the accrual account, it is already incurred, and as long as you say there is an obligation to pay, it's already confirmed, it's actually an obligation to pay, and you can still get deduction already. Now, even if you have not paid during the period, it is still an expense already. But I will tell you more. I'll tell you more about what happened if you don't pay this director's remuneration after some time. Now, I have a bonus session at the end of which I'll tell you more, John Ruben. But when it comes to deductibility, yes, it is actually deductible already. Okay. All right, now let's go back to our background of the case. Look at this, Now, this company, they are our client, they are in the business of trading of spare parts, they're doing spare parts trading. Then they paid salary, bonus, and also director's fees to a director. Let's call it Director A, Director A, from year 2015 to 2017. So no issue lah. It's common to pay salary, bonus, and things like that. Yeah. Now this has also been reported in the EA form, right? They've also prepared the form EA, right? They've also sent out the EA form to the director A. So director A received the EA form. So no issue, right? It seems like everything is okay, right? However, director A declared a lower income amount in his form BE. Now you see the problem. I pay director salary, bonus, and fees to the director. I prepared EA form properly, correctly to the director. But the director took the form, right, and do income tax, right? Declare his own income tax, right? But he declared a lower amount in his form BE. You see the problem, right? You see the mismatch, right? I know a lot of you may say, hey, then it's not the company's fault, right? The director go and, declare a lower amount. It's not the company's fault, but let me tell you when the IRB came and do audit, right? This is what the issues raised by the Inland Revenue Board. Yeah, this is real case. Yeah, when the IRB came, they audited. They found out that hey, you have been paying directors emoluments, and therefore they also check the director's side whether or not they declare their income tax correctly, and they found out hey, the director declared a lower amount. So what did they say? They suspected this emolument is not genuine. And the first thing that the IRB would say is that, hey, you know what? If the director actually declared a lower amount, could it be that the company actually did not pay such amount to the director, and therefore the director declared a lower amount? You know why? Because the director is a controlling director. The director is the one that controls the company, because the director is also a shareholder. Yeah, so it's a controlled company. So the IRB would definitely say, hey, you know what? Both parties are related. The director controls the company. So when you say the company has got this amount of director's emolument, but the director declared a lower amount, the first thing they would suspect is the company actually did not pay out so much of emolument. Yeah, did not pay out so much of emolument, and therefore the director declared a lower amount. So there must be something wrong with the company. They say it's not genuine, and therefore they say if it's not genuine, it's not incurred wholly and exclusively in the production of gross income. That means there's really no such emolument, right? So it doesn't satisfy subsection 33 bracket 1, and therefore it is not deductible, right? Because it's not wholly and exclusively for business, and it is not incurred in the production of gross income. Wow, and what happened? They disallowed the whole amount. They disallowed the whole amount of the expenses incurred. So all the directors' emoluments, right, that have been incurred, right, everything is now added back. Now look at the findings. This is the real findings. This is the real findings. Of course, we have to black out, some of the sensitive names, right? All right. So this is what they say. You see, for the director's fees, salary, fees, bonus, right, between 2015 to 2017, yeah, they look at all the salary, the bonus, the fees, and they found out that, right, okay, you have 8 directors, yeah, but they noticed that one of the directors did not actually declare the same amount. They declared a lower amount. You say kurang melaporkan pendapatan. They said they declared a lower amount. So something must be wrong. Something must be not right here already. Yeah. Okay. So what happened? Then they check. Yeah, they really check. They check the EA form against the income tax return form. BNCP is borang nyata cukai pendapatan. Borang nyata cukai pendapatan. They check what has been declared in the EA form against the tax return form of the director and see how much did they declare in their form BE. And they noted that, hey, all these 3 years, you see, 2015, 2016, 2017, it's always under declared one, EA form says 70 over 1,000, but the form BE only declared 40 over 1,000. EA form says 79,000, you declare 50 over 1,000. EA form says 87,000, you declare 65,000. So there is always a shortfall. So what happened? The IRB says all these shortfalls, 20 over 1,000 for each year, totaling 72,900 plus, that's almost 73,000. This almost 73,000 amount, they said this will be an issue, and I think this 70 over 1,000 could be non-genuine. Yeah, could be non-genuine because the director only declared 40 over 1,000, 50 over 1,000, 60 over 1,000, not as per what you have stated in your EA form. Therefore, I think this is not genuine. I think this is not incurred in the production of gross income. All added back. all at the back. Yeah, 70 over 1,000, all at the back. And 70 over 1,000 at the back. You know what's the tax effect over here? Like I always say, right, tax effect is roughly 1/4, right? Roughly 1/4, right? Because back in 2015, the tax rate is 25%, yeah. All right. So roughly 1/4, and that means roughly about like 17,000, yeah, about 17,000 is being added back. So 16, yeah, about 16,000, yeah, being added back, about 16,000 being added back, and there's also a penalty to it. And once we have added the penalty, it becomes 20 over 1,000, yeah, that the company has to pay in terms of tax and penalty, yeah, in terms of tax and penalty. And hey, you know what? This would actually cause the company to pay more tax and penalty. But of course, you may say, hey, this is not the company's fault, ma, right? The director declared lower, ma. But like I told you, it's a controlled company. The director is controlling the company. Therefore, the IRB go towards the company and say, you did not, you do not have an expense that is incurred in the production of gross income. Of course, we went in, we helped. Yeah, we went in, we helped. How did we help? We analyzed. We look at it and say, hey, how come, yeah, there's always such shortfall, all these shortfall are 20 over 1,000, there's always this shortfall. What really happened? What really happened? So we go into it, and we found out that this is the breakdown. Now, this is the breakdown for all 3 years. Now, what's the breakdown like? Of course, in the EA form, you would include everything. Now, you would include everything. You would include the salary, the bonus, the commission, the fees, the allowance, including all the car, petrol, and outstation allowance, and also incentive. You would put all of these into the EA form, yeah, and you get a total amount, and therefore the total amount is in the EA form, yeah. But you know what? This one that we highlight, yeah, the car, petrol, and outstation allowance. Well, these allowances, they are accessible on gross income. That means they are taxable. Now, traveling allowance, entertainment allowance, yes, they are accessible on gross income. However, do you know this? Many people do not know this. Let me tell you, many people do not know this. If the employee actually has to incur any expenses in performing his duties, yeah, then the expenses can also be allowed as deductions against gross income in arriving his adjusted income from employment. Yeah, that means, yeah, if this director actually has to spend on his own money, yeah, using his own money for all the traveling, that he has been doing, right? And he did not claim back, yeah. The first thing is he cannot claim back from the company, yeah. He is actually spending on using his own money. He did not claim back from the company. These expenses are actually deductible against his own employment income. Many people do not know that, but most of you, if you work for your boss, right, you will definitely claim all your traveling expenses, right? Yeah. So if you claim back from the company, of course, it's not deductible anymore. But if you have to use your own money to spend on traveling and you couldn't claim back, all these traveling expenses are actually deductible against your own employment income to arrive at your adjusted income from employment. Of course, you need to substantiate all of them with receipts, and you need to have a proper record, who have you met, what is this traveling for, which client did you meet, what kind of business meeting is that, because it must be for official duties. Yeah, must be for official duties. So what happened to this director is exactly the same. He received all these kind of allowances that has gone into the EA form, but he would use his own money to spend on whatever that he needs to travel. So therefore, he would deduct out, right, whatever traveling expenses that he has incurred to arrive at his net employment income to be declared on the EA form, in the form BE, in the form BE. So yes, that's right. So you see, we analyze the whole thing. We analyze the differences. We look at what's the amount, what's the difference, on the amount reported in Form BE of Director A and the EA form. And we found out the differences are actually due to the car, petrol, and outstation allowances paid to him, because the director actually spent all these allowances on traveling, and he has got all the receipts to substantiate that. Yeah. So we said, hey, look at this. The EA form is correct. The Form BE also correct, because the director did not declare the whole amount in the EA form because there is some expenditure spent. Yeah. So we substantiate with all the pay slips, the bank statements, to show that the company indeed pay all these allowances, emoluments to the director. And we also show all the traveling expenses receipts kept by the director. to show that there was indeed traveling, spent, traveling expenses being spent, and where are these traveling, what is the purpose of the traveling, all right? And with all this, we are able to substantiate that, hey, the director's emolument was wholly and exclusively incurred for the business purpose, and these expenses incurred by the director is also incurred for the production of gross income, because he needs to travel, right, to earn the director's emolument, right? So with all that, the IRB dropped the issue. They dropped the issue because they say, okay, since you have done a good analysis, you have got the EA form, you have got the form BE, you have got the breakdown of your emoluments, and you're able to show that the difference is due to all the traveling expenses, and you've got all the receipts to support. Yep, no problem. Yeah, it's okay. It's correct. See that? And because of that, we dropped the whole issue. The company need not to pay that additional tax and penalty. See that? So that's a really good thing to do, right? And of course, what's the rationale behind? The rationale is simple. As long as your expenses were incurred wholly and exclusively in the production of gross income, you would qualify for tax deduction. From the company's perspective, if I were to pay to my director emoluments, that is actually deductible. And from the director side, employee side, if you can show I have to spend on traveling using my own money, and I am actually I'm spending this for official duties, and I have all receipts to support, yes, I can also reduce my employment income. See that? And of course, most importantly, you must have proof. You must have all your proof, all your evidence to support whatever you're saying. Because we managed to do the analysis and gotten all the proof, therefore, we dropped the whole thing. See that? So this is something very, very important, that you would need to know. Okay, now I see there are a lot of questions coming in. Don't worry, I'll be answering to all your questions. I'll definitely be answering to all your questions. But let me remind those that have just joined us, because I can see the number of viewers are increasing. Now, you can still do it right now because today is very special. We are going to give out 3 tickets to our tax audit and investigation webinar, and each ticket is worth 498 ringgit each. 498 ringgit. Now, if you have not done this, share this Facebook live out right now. Share this Facebook live out right now, because if you have shared this Facebook live out, and if you tag 5 friends, just tag 5 friends in the comment box. Once we have seen you have tagged 5 friends, we will be putting your name into our lucky draw pool, and we will be drawing 3 names later to win one of our 3 tickets to our tax audit and investigation webinar, and that's worth 498 ringgit each. Right, so do it right now, share this out right now, and tag 5 friends in the comment box. Now, we are not done yet, because I still have bonus session for you all. Remember, I still have bonus session. Yes, right? Now, before that, let me just tell you what's our advice. So the advice is very simple. First, ensure director's emolument is declared correctly in the EA form. Right? Please make sure you don't declare wrongly in the EA form. And make sure all the proper documentations are available, to justify all the purposes. Whatever that you do, you need to have documents, you need to justify the purpose, with documentations like your form EA, your payslip, your payment proof, etc. So these are the things that you must keep. Okay, so I'm going to go into a bonus session. For all of you. Now, I know some of you was asking me this question, I say, hey, if I were to accrue director's fees, if I'm to accrue director's salary, director's fees, can I not pay yet? And do I still get deduction? And my answer was yes, right? My answer was yes. If you actually accrue certain director's remuneration, director's emolument, well, even if you don't pay, as long as it goes into, the accrued account, you have obligation to pay, yes, you get deduction. But this is one very important thing that I want to tell you. This is a bonus session that I want to share with you. Also about, director's emolument that always happen. And this talks about related parties' employment income. Now, a director is definitely a related party. Director controls the company. Director is definitely a related party. But did you know, if you were to pay director's emolument, and if you accrued it, and if you still don't pay it, now there is this saying, now look at this. Now, we always know that for director's fees, for example, if you accrue director's fees, but you don't pay director's fees, the director need not to declare income tax until they receive payment. Yes, for director's fees, yeah, it is always on received basis. Received basis. That means from the company's point of view, if I've accrued the director's fees, I will get deduction because it's accrued already, I have obligation to pay. But from the director's point of view, as long as I've not received the money, I don't have to pay tax because I have to be taxed only on received basis. If I don't receive money, I don't pay tax. Well, then if that's the case, a lot of people will say, if I accrue and then if I don't actually pay, then I can delay for many, many years until the year where I pay, only the director has to pay tax. Now, not really the case. Why? Because with effect from year 2014, the government has actually imposed an anti-avoidance measurement. Now, what is this anti-avoidance measurement? It's to deem the employment income to be assessed in the immediately following year of assessment, where such amount of employment income becomes first receivable. This happened to related parties transaction. This would apply to related party transaction. So what I'm trying to say here is that if I were to accrue a director fee, all right, I get deduction for my company. But if that director doesn't receive money, even though he doesn't receive money next year, it has to be accessible immediately following the YA, the year of assessment, where I have made it receivable to the director. Now, this is provided in the Income Tax Act, Section 39 sub 4. Section 39 sub 4 of the Income Tax Act talks about, hey, you know what, where a relevant person is entitled to any gross income, under Section 25 or Section 27. This one talks about employment income. And director's fees, yes, it's an employment income, right? And if this happened to a related party, if this amount relates to any transaction between persons who one of whom has control over the other, between individuals who are relatives, or between persons of whom are controlled by same other persons. Now, this means related party transactions, right? And once it becomes receivable, right, in the relevant period, it will be deemed as received, right, in the following relevant period. In other words, if I were to accrue the director fees this year, even next year I don't pay the director would have to deem to have received the director fees next year, and the director will still have to declare as taxable income the next year. Now, I know you probably still very blur right now. I don't get what exactly this means, right? I'll show you one example. Let me show you one example. Then you will understand this very, very clearly. See this, Mr. A. Mr. A is a director for ABC St. Rembahat, who's also a shareholder, holding 80% of the paid-up capital. Definitely, Mr. A is controlling the company. Mr. A is definitely controlling the company, right? Okay, so this is a related party transaction already, if there's a director fee. Now, ABC St. Rembahat accrued director fees amounting 30,000 in 2019. And the financial year of the company is closing on 31st December annually. All right. Now, so in year 2019, the company accrued the director fees and put it into the 2019's accounts. All right. So again, can I get deduction? Yes, it's accrued already. Once it's accrued, you can get tax deduction already for the company. But the director's fees were not paid. They were not paid. You see, in 2019, you accrued it, you don't pay the director fees. In year 2020, you still don't pay. And I always tell you that director's fees, right, from the director's point of view, it is on receipt basis. That means, right, you need to receive the money before you will be taxable, right? You gotta receive the money before you'll be taxable, right? So what happened? You see, although Mr. A did not receive the director fees in year 2020, the director fees is still taxable in 2020. The director fees of 30,000 is still taxable in year 2020. Why? Because Section 29 of the Income Tax Act says so. They say once it is a related party transaction, once you have accrued an amount, it becomes what? It becomes, right, deemed to be able to obtain on demand. The director can just tell the company, you have to pay my director fee already, even though he doesn't demand, right? But they can demand. So if this is a related party transaction and the income is able to be obtained on demand, it will be taxed in the period immediately following the relevant period. It will be taxed in year 2020, which is 1 year immediately after year 2019. See that? Now, so this is very, very important. Next time, if you have got any director's fees, don't just say, oh, because it's not received. If it's not received, then it's not taxable. No. It has to be taxed in the next year because of this Section 29. Okay, so please take note of this. All right, so this is the bonus thing that I want to share with you. This is the bonus thing that I want to share with you now, and I always want to tell you all right, now I know a lot of you always like to know more tax knowledge. You want to know more tax savings knowledge. You want to know more about, how can we optimize my tax? How do we, pay tax efficiently without paying unnecessary tax? I know you want to do all that, right? But you know what? It's not easy to find all this kind of tax knowledge, practical tax knowledge especially. So what we have got here is this tax pod. Now, what is tax pod? Tax professionals on demand. Now, what's tax professionals on demand? Let me just briefly let you know that tax professionals on demand is actually a platform of which you get to access to all our tax knowledge videos, all the videos that we talked about tax, right? We have all these videos in there, and not just that, you also get to attend to all the live session, all the live sessions that we have, all the live webinars, all the live monthly update class, which is not done via Facebook, they're all done via Zoom, right? We have all the webinars, or the update class every month that talks about the latest tax updates. They are all, given to you for unlimited access. Yes, unlimited access. You can attend how many times you want, right? But now I don't want to explain too much on what this is. But if you think, hey, this is something really great, I really want to know more about the platform, with all these tax knowledge videos, with all these live webinars and live update class, Now, if you want to know more, I have got a very, very great offer for all of you because you are joining my Facebook Live right now. A very, very great offer. You just have to register your interest. Go to this link, bit.ly/YYC taxpod28, bit.ly/YYC taxpod28, or you can see the link in the comment box right now, you can see the link in the comment box, of which my colleague has put up that link in the comment box. Go to that comment box, right? Click that link, or you can type this link, bit.ly/YYC taxpod28. Register your interest, right? There's no obligation, don't worry, just register your interest. We'll get our professional team to get in touch with you to let you know more, to explain more to you what this tax professionals on demand is all about, what this tax pod is all about, so that you can always increase your tax knowledge. All right, so if you're interested, just go to this link or just click that link that you see right in our comment box right now. Click that link, register interest. There's no obligation, don't worry, because we have special offer for you because you're watching Facebook Live right now. All right, then you will understand more what tax pod is all about. Okay, all right. Okay, I have seen so many people asking questions, and I can see so many people are actually, putting up questions and also tagging friends. I know you want to ask questions, right? So let's go into Q&A session. But let me just drink some water. Before I go to the Q&A session. Okay, all right. Now let me just go to this part. Okay, I have got question here from Joey Ang. Hey, wait, no, Mi Hong first lah. Okay, I'll go to Mi Hong. Now, Mi Hong has got this question asking, okay, let me just put back into the previous slides in case you want to know, hey, what's the link for the tax pod again? Okay, I'll just bring this back. Okay, Mi Hong has got this question, if a director declare emoluments based on payment basis, director declared lower because of some yet to be paid. Now, Mi Hong, like I told you, director is declaring income based on receive basis. Receive basis, that is really correct. That is correct. So if you say the director declared based on payment basis, that is right. That is definitely correct. No problem with that at all. Because I told you it is based on receive basis. Based on receive basis. All right. Next question. Okay, I have another question here from Joey. Joey Ang say, if it's investment holding company, every month we paid out director's salary is a fixed amount. Is this director can be direct operating costs and fully deduct in tax computation? Because now this director's salary is only allowed for deduction in permitted expenses under section 60F. You are right, Joey. You are right, because this company is an investment holding company. When it comes to investment holding company, you can't take a direct full deduction from the director's salary. You can't, because section 60F says very clearly, an investment holding company, you can only treat the director's salary as permitted expenses, and there's a formula to calculate how much deduction you can get. Unfortunately, in an investment holding company, that's how you do it, not because it's not a normal company carrying on a business. Investment holding company is not carrying on a business, therefore you don't get the business expense deduction. Unfortunately, Joey. All right, I've got another question here from Ike Loan. Ike Loan is asking, so should declare all directors' expenses as company expenses without including the amount in EA form? Well, Ike Loan, it depends. Now, if you say if you say you want to declare all the director's expenses, like all the traveling expenses for official duties, if the director is going to claim back from the company, you want to put all of them into the company's expense, yes, that's okay. Now, if you do put that, if you claim back all of them, right, then maybe, you, I mean, it depends on whether you still give an allowance or not to the director. If you still give allowance and you still allow them to claim back, then of course the director has to declare the full amount, because he cannot take any deduction anymore, because it's not spending, it's not spent from his own pocket, right? He claimed back, But if you say, oh, because they get to claim back, therefore I don't give the allowance to the director anymore, then okay, then the director's allowance will be reduced. The director need not to declare such a high amount of director's emolument, and then because all of these are actually expense off under the company's account. All right, Eklon, can ya? All right, I've got more questions from the other side. Let me just see. Okay, wow, got a lot of questions over here, yeah. Like, okay, previous one. Kurt Liao, was asking, what if we set off emoluments against the director's account? Kurt Liao, what do you mean by this? You see, you try to set off emoluments against director's account, and you try to say that this is received already, is it? Now, let me tell you, once you actually create it, or you contract it against the director's account, it is deemed received already. It is already deemed received, and that means, right, the director has actually received the emoluments already. Okay. B Ching Lim is asking, director declared lower income instead of follow EA. Why not penalty on his personal tax but becomes company's fault? Very good question, B Ching. I know, yes, most of the time you will say if the director declared lower amount, it should be the director's fault, right? But because this is a controlled company, right? This is a controlled company, the director controls the company. So they are trying to say that this company is not declaring a genuine director's emolument. Therefore, they go to the companies first. But of course, in our case, problem solved. Problem solved, because the director also did not under-declare. They actually took deduction based on all the traveling expenses that he has spent. Okay, now Chin Ching has got a question. Chin Ching, if company give perquisite worth 10,000 to director as long services, let's say 15 years, okay, still can get 2,000 deduction. I'll only declare in the EA or all amount. The company is still deductible. The company is a controlled company. Now, Chin Ching, if you say this director, right, actually get how we call it, fulfill the conditions to get this 2,000 exemption for long service award, because he said he have worked for 15 years, right? Then I would say the 2,000 will still be applicable. The 2,000 exemption will still be applicable. But very important thing is the director cannot have control over the company. That means the director cannot have shares more than 50%, and he cannot be playing a control role, a controlling role like a managing director. Because if you are playing that role, if you can control the company, you don't get such exemption. That's stated. If you don't get that exemption. But if the director is just a normal service director working for the company, then there's no control element, then yes, the director will still get this 2,000 exemption. Okay. All right, I have more questions over here. From whom? Let's see. Let's go down. Okay, this is from Penny. Penny Hua. Penny Hua is asking, are directors entitled for tax deduction for their yearly family overseas trip? Of course, it's leisure holidays for directors with their direct families member. Penny, you know already what? It's leisure trip. What? If it is leisure trip, of course, no deduction, right? Whether the company pays or the director pay on its own, of course, there's no deduction, because this is not even for business purpose. It's not even an official duty, Penny. So this kind of leisure trip, of course, there will be no deduction. There's no deduction. All right. Okay. Such ease. Well, control company under section 139(5), loan creditor of a company may be treated as a member, and the references to share capital may be treated as including loan capital. Does it mean need to declare in related party, but loan creditor is not related person? Oh, such. So this is like totally not related to what we are talking today about directors emolument. So you're talking about, there's a loan, there's a capital, and you ask whether this is related party, but loan creditor is not related person. So you are saying section 139 will be treated, loan creditor will be treated as a member, and reference to share capital may be treated as including loan. Okay, now such, now I don't really quite get your whole question, but you know what, such, now if you really want us to really look into your case, why don't I suggest this? Drop us a message, PM us with more details, then we can see how we can actually look into this. If you think we will really need us to study the case, yeah, we can actually propose something and study the case for you. Because when I see this, I don't really quite get it, right? And of course, it is also not related to our topic today. Yeah. So if you have got more questions, just put into our what you call it, just drop us a message, just PM us, and we'll answer that. All right. Okay. All right. Next question I have here. Wow, so many questions today. Yeah. Okay, I have this Simeon. Simeon is asking if there's N years of director fee still remain unpaid. We want to settle in the current year. Will there be any issue when we pay out and report in director's current account? Okay, in current YA, sorry, current year of assessment. Now, Simeon, now I told you, right, if it is unpaid, right, it is deemed to be paid the next year. So if you're going to settle it right now also, right, the issue will still be there. Yeah, that means the director will still have to actually declare all the director's fees in the year after it has been accrued. Yeah, the next year, the following year after it has been accrued. So even if you say you're going to pay it out right now, right, the director cannot say I'm only declaring all my income this year. It will still be income taxable in the year following it has been accrued. All right. So yeah, Simeon, I would advise you to go and revise all the income tax return form of the director to prevent further complication. All right. Okay. I have more questions now. Okay, I know there are really a lot of questions, right? I'll just pick a few more. Questions, yeah, because there's just too many. Okay, and I'll pick some relevant ones. But please just let you know that we are going to go into the lucky draw session very soon. Yeah, we're gonna go into lucky draw session very soon. So I'll just give you maybe 2 more minutes for you to share this Facebook Live out, tag 5 friends, yeah. 2 more minutes and we will close that lucky draw thingy, and we have to put all the names into our lucky draw pool. So last 2 minutes for you to share and tag 5 friends, yeah. All right, last 2 minutes. Okay, let me just see. Wow, more questions here. I have questions from Catherine Tang. Catherine Tang is asking, if the director is also a shareholder, the traveling allowance is deductible? Well, yes, of course. Well, traveling allowance is definitely deductible. Yeah. For earlier example, Director A received allowance and he still incurred traveling from his own pocket. Isn't that already reimbursement? Well, not really. Because you see, if the director received the traveling allowance, and if that is actually an income of the director, and if I incur traveling expenses that I do not claim back from the company, the company actually do not have any expenses anymore. There's no expenses incurred by the company. It's just a traveling allowance given, of which is also taxable in the hand of the director, and the director now spend his own money to expense off the official duties traveling, and that would actually give the director a deduction against his salary. So it's fair. Imagine if the director doesn't come up with his own money, they go and claim back from the company. The director will receive more money, right? And therefore he doesn't get deduction already, because he received more money already, right? Because he claimed back from the company. See that? Yeah. So because he didn't claim back from the company, he gets to deduct against his salary. All right, Catherine, I hope you get that. Yeah. All right. I have another question from Vivian Lee. If accrued and also issued EA form for the accrual better, right? What do you mean by accrual better? Vivian, now if you have accrued, right, but if it's not paid, well, rightfully, you don't actually put it into EA form, because you will only declare in the EA form if it's already paid, right? If it's accrued but not paid, right, you don't put it into EA form, yeah? So when you say, is it accrual better? Well, I don't really get that part, yeah? But the fact is that you don't actually put into the EA form, okay? All right, I have another question here from Kai Ying. Kai Ying is asking, if the accrual director fees have been brought forward for years, what can we do other than paying off the amount? Well, Kai Ying, right? What can you do? I would say, if it has been accrued, right, and has been brought forward, right, it is deemed to be paid in the next year already. It is deemed to have been paid in the next year. So you got to declare that already, because I told you, Section 29 says so. Yeah, the director's remuneration, right? Even if it's not paid, it has to be deemed to have been paid in the following year. So you ask me, what else can you do? Well, of course, the best thing is to declare all this income in the relevant years, and quickly pay up all the taxes. Yeah, don't delay further. All right, Kai Ying. Okay, I have, so many questions. Okay, I'll pick 2 more questions, then I got to go into the lucky draw session. Yeah, I got to go into the lucky draw session. I'll just pick some questions from people that have not asked me before. All right, like this one, Mei Chin. Mei Chin has not asked me a question before. For the case regarding director paid car petrol expenses by itself, how come it will enter to company expenses? Okay, if it entered company expenses, that means was paid by company or due to directors, because the double entry is debit expense, credit cash, or director. Meijin, so you're saying director paid the car petrol by itself, but it entered into company expenses. Now, are you talking about your case that the director actually claimed back the petrol expenses from the company? Now, if the director claimed back the petrol expenses from the company, of course it will go into the company's expense. Yeah, it will go into the company's expense, because you are really paying off some petrol expenses for business purpose. But if you say the director is paying on his own, of course, it wouldn't go into the company's expense, because if he pays on his own, he doesn't claim back, then he would only take that expense and deduct against his own, traveling salary, because he can reduce his salary. So I don't quite get this part, but when you say how come it will enter company expense, I think it's because they claim back from the company. If they claim back from the company, then of course it becomes a company's expense. All right, can All right, then I answered to maybe 2 more questions for those that have not asked me questions. Yeah, Simon Wong is asking how to treat the over provision of directors' fees in the following year. Okay, for example, 100,000 provided in 2019, paid 40,000 in 2020. Now, Simon, if you say this is an over provision, that means this was not even accrued. This was only a provision, is it? Now, let me tell you, if it's only a provision of director fees, it won't be even deductible. It won't be even deductible, at first place. But if you say, okay, it was accrued, it was an accrual, right? I've accrued this director's fees, but in the end, right, we actually overturn it, and then we say, oh, we're not gonna pay 100,000, we're gonna pay 40,000 only. Then quickly in year 2020, reverse it back, reverse your accrual back, because in the next year you have to quickly reverse it back, because you only paid out 40,000, and of course the director would have to pay tax based on the 40,000 because you paid 40,000, and you would have an over accrual. You will reverse it back, and this reversal will become an income, so-called income to the company. Simon? All right, one last question from Elaine. All right, before I go to the lucky draw session, can company get full deduction if he claims mileage reimbursement? No problem. Elaine, no problem. If you use mileage method to claim for all your traveling and things like that, no problem at all, because as long as you have a proper record, where have you traveled, what's the distance, who do you meet, which client do you meet, you can always claim deduction. No problem. Just like how an employee can claim. All right. Okay. Now I have to go into a lucky draw session already. I have to go into lucky draw because I can see many people have actually put up, shared, their this Facebook Live out to their friends and things like that. So let me go into the lucky draw. But before that, I need to first unshare my screen, and then I need to reshare my screen. Just let me stop sharing, share again. Give me 1 minute. Okay. All right, then I'm bringing out the wheel. Let me bring out the wheel. Okay, this is the lucky draw wheel. I hope all of you can see. All right, now these are the people that have already shared out and tagged 5 friends. So you will stand a chance. You will stand a chance to win one of the 3 tickets to our tax audit and investigation webinar. So I'm gonna draw 3 names. I am going to draw 3 names. So let's look at who is the first person. Let me spin and see. The first winner goes to yes, it's Sky Lim Bukai. Yes, Sky Lim. Thank you so much. Thank you so much for tagging your friends, and you have won the first ticket. The first ticket to our tax audit and investigation webinar. That is worth 498 ringgit. Now you know what, Sky Lim, help me one thing. Just drop us a message right now. PM us a message right now to tell us that I'm here, I'm the winner. Yes, I can see Sky already. Right, you are the winner. Right, just drop us a message, and we will get in touch with you and give you the ticket. All right. So I've got 2 more names. Got 2 more names to draw. So who is the second person? Let's do it. Let's look at the second person. Who is the second person? It's Jin Yi Law. Yes, congratulations, Jin Yi below. You are the second winner. You are the second winner that is able to get our free ticket to our tax audit and investigation webinar with 498 ringgit. Ginny, can you just drop us a message? Just PM us, tell us that I'm here, I'm the winner. So you will run away right now with this free ticket, all right, to our tax audit and investigation webinar. All right, we have a last winner to draw. All right, I know you see all your names here. And you really want to be the winner, right? But we just have to see if it is you. All right, so let's look at it and see if you are the winner. Let me spin the last winner. Let's see who is the last person. I think it's this person. Yes, it's Karen Law. Karen, you are the third winner and the final winner to our tax audit and investigation webinar. And you have just won yourself a ticket to our tax audit and investigation webinar with 498 ringgit. Congratulations to you. All right. Now, thank you so much. Now, Karen Law, please drop us a message. PM us to tell us that, hey, I'm here, I'm the winner, yeah, so that our team can get in touch with you and give you that ticket. All right. So once again, thank you, everyone. Thank you so much for joining me today, yeah, on our episode 28 of this tax audit, tax audit solving skill, like how to solve tax audit issues. Thank you once again. And I really enjoy seeing all of you here. Once again, please remember to go to my Facebook page. That is Tax Guru Zen Chow. Like, share, and most importantly, follow my page, because I'll be doing live from time to time, and I will be sharing more techniques, more secrets to all of you. Yeah. And to those, that I know you have asked a lot of questions and I couldn't answer your questions. Sorry for that, because we have time. I don't want to drag this so long. I want to do this only until 12 o'clock. Yeah. So hope you can join me in my next live session again. And if you want to go back and view all the previous videos, go to my Facebook page, that's Tax Guru Zen Chow. Go to the video session. You will see all the previous videos over there. All right. So hope to see you again in my next live session, and have a great Friday. Have a great weekend ahead. All right. So see you again next time. Have a great time. Bye-bye. Thank you all, and goodbye.
我相信我可以，有目标就往上爬。你相信你可以，勇敢的往前冲吧。有想法就有办法，有办法就不用怕，我们一起到达，是 No.1， 强大的企业家，超越表现的力量，我们一起到达。超越表现的力量。我相信